What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 20th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, I want to spend some time to dive into the rebound we've been seeing here over the last 3 trading days, coming up from the $38,000 range upwards towards $42,000. And I not only want to spend some time to dive into price, but explain why we are seeing this kind of rebound in price and why our theory that institutions or larger scale investors have been accumulating is proving right. Let's go ahead and take a look at the range of metrics we follow here on the channel, guys. You won't want to miss this video. So again, just taking a quick scan here over the past 48 hours or so, we've been seeing a lot of significant price action here from here on April 18th, here towards the early part of April 20th, rebounding strongly here yet again, just like we've seen each and every time around this range when we get the capitulation, when we get those near 18, 20, 25% corrections like we've been seeing with higher lows and higher highs generally each and every time here for these significant pullbacks and rebounds. Now, this is not only what we talked about in the previous video, but there's one big point that we've emphasized, which is that right now we are starting to see a lot of accumulation in the market. So let's go ahead and take a look through a variety of different metrics here. So first off, we need to understand what are the kind of signs that we can see here for accumulation. First off, I want to take a look at the broad data science models. Fear and greed index, which we've talked about a lot. Usually, institutions, larger investors set heavy limit orders or bids on the order book to get orders filled during capitulative periods. They do not like to buy at all-time highs. They like to buy substantial, serious size positions when we get the 30, 50% or more corrections. And that's exactly what we've gone through here since back in November. The second thing as well that we can see in the sense of on-chain metrics for accumulation is the new all-time high in the 1-year HODL wave. This is the amount of Bitcoin on-chain through unspent transaction outputs that have not moved in over a year, right? Or a year or more in this case. Some of this, again, has not moved in over 10 years. Some of these Bitcoins have just reached into the category of 1 year. It's a huge swarm of Bitcoin here, but we're coming up here on nearly 2/3 of the network here. Almost 2/3 of all Bitcoin ever in circulation are about to be in a position where they have not moved in over a year, right? This is the highest level we've ever seen throughout history. We not only surpassed the previous September-October range, which, as you all see, led to a major rally in Bitcoin's price, that supply contraction in the market, but on top of that as well, it looks like we're very close to charting towards 65 and 66%. Again, big psychological level here for about 2/3 of the market. Now, if these data science models and the price action of higher lows and higher highs isn't enough, there are a lot of other things we can turn towards here to get some good insights. As we can see here, not only is the market price showing it here on Bookmap, we can see that there was a major pickup here just yesterday, in this case, or earlier this morning. We're seeing a big amount of buy-side pressure here in the market. Some major whales coming in, filling ask orders on the order book. And all the while, there are some people who, again, right now, depending on the exchanges you're looking at, are selling and kind of distributing some positions. It seems like it's a changing of the guard. We're seeing that the market order flow is intense when it comes in. And on top of that, that there is decent buy-side support when it comes to the limit orders or the bids in the order book. That's continuing to support price higher as the market order flow charters higher and drags price upwards towards 42 to 43K eventually here within the coming hours and day. Now, I want to go ahead and show the ultimate chart, though, that you guys need to see here, right? It's one thing when we can see the market data here through our partner Bookmap. You guys can definitely check them out and use them. We have a link down below in the description. It's one of my favorite tools outside of TradingView. But there's also something else that a lot of people aren't watching. And it's something we talk about here from time to time here on the channel, and that is the wallet amounts that reach over certain thresholds of Bitcoin. Quote unquote whales, the larger players, the institutions, people who hold large sums of Bitcoin, and therefore, whether they're buying or selling, can have a huge impact on the direction of price. Well, one important thing to understand here is that when whales are selling or buying, sometimes it's not always apparent right away. It's not always apparent that they're either removing their positions or adding to their positions, because they can be providing limit orders, in this case, bids or asks on the order book. And effectively, to kind of explain this, whereas most of us probably when we buy crypto or sell it, we market buy or market sell. We take the best available price to buy and best available price to sell. These whales or larger players might be doing limit orders right? So they may not be going so noisy into the market, because if they go out and market order $100 million of Bitcoin, either buying or selling, they're going to incur slippage. And that's not very convenient for them. It's kind of like a hidden fee in this case, having to deal with this kind of spread or slippage in the market. But the important thing to note here, and I'll explain it further on this point when we take a look at it, is we can take a look at the on-chain metrics to see what they're doing. And really, for the past couple of years here, the amount of wallets with 10 Bitcoin has been relatively flat here. And a lot of people were worried that this was declining, therefore that a lot of them were offloading their Bitcoin. But really, in reality, we're not only generally neutral since back here in June, but on top of that, we're actually slightly higher, about 1,000 more wallets. But I would say the trend here, generally neutral here after the pullback here from December, where we saw some of this distribution. The whales decline their positions when markets move higher, not when they move lower. Let's take a look here at the next threshold. If it's not really the 10 BTC or more wallets adding positions, who is? Well, let's take a look at the 100 BTC or more wallets, right? So we can see here that there are about 15,976 wallets in the Bitcoin ecosystem that have over 100 BTC. We can see here that they're really not selling, and they really haven't been since as far back here as in April of 2020. That number has remained relatively flat. Most of that decline came back here during the previous bull market and during the sell-off in the market here, right? Again, a lot of that distribution starts when the euphoria kicks in. They distribute their positions. But really no significant decline here. So the whales aren't selling like everyone was so worried about. We're not seeing some massive exodus out of the market. So are we seeing anyone particularly buy or particularly sell? That's going to help us to determine price, or at least get a sense of where price could be heading. Well, let's take a look at the real whales. The 1,000 or more BTC wallets. Wallets on the network that have more than 1,000 Bitcoin. Just over the past month here in March, into April, we've seen a major uptick here in the amount of wallets that have a large amount of BTC reserves. Now I'm going to go ahead and state something that is important to note here, which is that first off, there are exchanges in this case who can effectively, and this is where you have to understand that the unspent transaction output model in this case, or basically the HODL waves, shouldn't be taken at absolute face value, but generally speaking, they do dictate the trend here, whether or not whales or minnows, in this case, some of the 1 BTC, 10 BTC, some of those still large entities in the space that can have an effect on price in the grand scheme of things, whether they're adding or removing their positions. But with some of the recent big buy-side orders we've been seeing here from the Luna Foundation buying BTC, from institutions coming in and buying on the dip, companies and corporate treasurers still picking up positions, they have provided the necessary buy-side support to wane off any sell-side pressure. And the way you can prove this here is through market price. Because if there were more sellers here than buyers, if the market was panicking and fearful at this moment, you would see lower highs and lower lows. And so far, since the beginning of the year, even though I know we had a harsh correction from back in November, one in which we were calling for it to continue, right down to that 30-35K range, which we got, since we've gotten down to that $30,000-$35,000 range, we've been setting higher lows and higher highs every single time. I can't express it enough, guys. I can't be bearish in this case, because every time we come down in these pullbacks, we're getting buyers coming in at higher prices. The buy-side volume is looking very, very nice on these rebounds. Consistent days of green buy-side pressure, sometimes incredibly strong, depending on the exchanges. Now, if you guys are like me and you're focused on this kind of long-term perspective in the market, and you see this accumulation going on, and you're not worried about the short-term bumps and everything, you just want to get some exposure long-term, one of the companies that I can definitely recommend to you guys, especially if you're worried about having to deal with taxes and all these burdens that can come with investing in crypto or any other market, I definitely would recommend checking out iTrust Capital. Now, iTrust Capital is a cryptocurrency IRA that allows you to invest in cryptocurrencies either passively or trade actively in the market through an individual retirement account. which helps you to defer your tax obligations for capital gains, in this case, as well as income taxes. And it's a really interesting structure. You can maximize $6,000 to $7,000 of your income into the IRA and basically not have to deal with any taxes related to trading in that account. You get access to a wide range of cryptocurrencies as well as physical commodities such as gold and silver. Definitely recommend you guys, if you are looking to plan for retirement, planning for a safe financial future, I think maxing out that IRA contribution is the right decision for a lot of people. They've got great support and a lot of great reviews here for the platform. Now, going back here to close off on this topic, guys, looking at market price here, just taking a look at the grand scheme of things, right? I'm going to take it here to the weekly. I think that's going to give a better picture here. We've continuously seen higher lows here since back during the January-December range here, through the previous lows back here in May and July, and here between January to April of 2022. We have not seen some doomsday sell-off in the market. We've had many, per se, black swans or events that could have spooked markets. The Fed finally going on towards quantitative tightening, war in Ukraine, all kinds of things that could have knocked down prices. What more can you toss at Bitcoin that it already has not faced that's really going to drag down its price? Because what I'm seeing here is resiliency in Bitcoin's price. And every time we take a look at the long-term ratio here between equities and crypto, I'm seeing buyers come in. And I'm seeing crypto, more specifically in this case Bitcoin and other assets alike, keeping up with equities or outpacing them. This is all you need to see here. During fearful or good times, crypto outpaces equities on the longer term trend. Anyways, guys, I've rambled on long enough. I hope you enjoyed this video. If you like it, consider dropping a like, consider subscribing, hitting that bell icon if you haven't already. Love hearing from you guys down below in the comments, whether you agree or disagree. Would love to get a conversation going. But until the next one, everyone, stay safe, don't leverage trade, and I'll see you all in the next video. Take care, everyone.